Hey everybody, how you doing? So today I want to talk about financing. If you're going to be wanting to build a spec home, or maybe you're building one now and you've recently got financing, you're kind of going through that process. This is definitely one of the probably the hardest step, because not everybody is able to get financing, and all banks seem to do things differently. One tip that I always give to people is, talk with a bank that is a smaller local bank or credit union. They're more likely to do construction loans, number one, which is the type of loan that you're going to need when you're building your spec home. And number two, they're going to be more likely to work with, a startup, essentially, like somebody like yourself. And some banks will require, for example, the bank that we work with, even if we bought the lot and we own the lot free and clear, the bank that we use for our spec loans, they're going to require 25% down of whatever that build cost is. Even though we own the land, they're not going to use that as collateral. That's what their requirements are. And before we started using this bank for spec loans, we had another bank that we used, and that was around 2010, and they did 3 houses for us, and then that was it. So 2008 was when we had all kinds of banks having issues and collapses and housing market collapses. So this particular bank just decided that, what, we just don't want to do spec loans anymore. And that's, part of the problem is going back to the 2008 housing recession that we had. There's a lot of lenders that just don't want to, they see that as too risky, which, if you're an individual and you're just building one spec home, it's not like you got 20 spec homes that you're going to put up. And this bank is really like, if something happens and the market goes down, they're screwed and you're screwed. It's not like that. If you have one house, it's a little bit different than that. One of the general rule of thumbs, if you're a real estate investor, if you're somebody that is looking to get into real estate investing, you don't want to get caught holding the bag. So you don't want to go out and start maybe expanding a little bit beyond your means, and maybe expanding or dipping into new areas that you're not comfortable with just because everything's rolling really well. You don't want to get stuck holding too much property, too many lots, too many spec houses. So, and that's a fine line. I mean, when the market's good, the more lots, the more spec homes you have, the better. Now, if you are, with lots, for example, if you're able to pay cash for lots, well, then it doesn't matter. You can hold on to them. You can ride the downturn through a few years if you need to, and then sell them on the upswing. You don't want to do that with spec homes, obviously. But back to the kind of original topic here. So financing, it's very different with lenders. And I have a client that I spoke with yesterday, and I've used him as an example before, and I give him huge props. It's Nick, and he's actually building a side-by-side right now, currently. And so he is doing this, and he, the great thing about it is he's got a customer who has given him a deposit, who's going to be purchasing. He's going to live in the one side, and then he's got somebody that wants to buy the other side. So how great of a feeling is it to have your spec home going and knowing that you've already got it sold? That it's a really, really good feeling. And then kind of starting to even look towards the next one. But we were talking about financing yesterday, and the way that I explained how our bank requires is, we have to put down 25%. And once we do that, well, let me back up a little bit. So we give the bank the blueprint, we give the bank our build cost breakdown. So for example, we're going to build this home. Here's the blueprint. The build cost is going to be $450. So that's what we need to borrow from the bank. The bank is going to do an appraisal. And because we're the builder, and we're not paying another builder to build this, and we're not paying that builder's markup, really the home should appraise out for more than what our build cost is. It really should. It should appraise out for basically what our build cost is plus, at least 10%. I mean, because if we're going to build a house and sell it to somebody, they're paying what our build cost is plus 10 to 15%, and it appraises out for them. So they're going to do the appraisal, and they're going to come back and say, yep, everything's good with the appraisal, and then we're going to close on the construction loan. And when we close on the construction loan, all of the funds that we need for the total build cost, the $450, goes into a title company's escrow account. I'm just going to pause here real quick, and I want to talk about the course that I finally released for building a spec home, steps A to Z. So starting with financing, like we're talking about right now, all the way to marketing and selling your spec home and every little detail in between. I mean, I'm talking about every single step from financing to finding the lot, what to look for in the lot, how to find a home plan, how to get that turned into a blueprint, how to get that bid out so you know the exact build cost, how to put the budget together, selections, scheduling, everything is in there. And the great thing about this is I am going to offer support as well. If you purchase the course, I'm going to start, I think, a Facebook group so that I can, people who buy the course can post questions in there. I can maybe do some live videos in there and answer questions. And throughout the years, I'll add to that course as well and make it better. But initially, if you're purchasing it, and it's already great, but if you're purchasing it and you do have questions or you feel like there's something I didn't cover, I'll have support for that. So info is in the description below. There's a link that you can click on. You can make payment there to buy the course, but you can also see all of the topics that are going to be covered in the course. So it's lengthy. I mean, it's something that and it's good audio too. Like you can basically, throw it on and maybe stream it to your car or listen to it in the car. And I do have plenty of worksheets, handouts, checklists that go along with that as well. So, all right, so back to the financing. So all of the money goes into an escrow account at the title company. And then we'll usually want some type of a draw at closing so that we can pay for the building permits and pay for some things that we need to before we take the first draw. Because the first draw is going to come after site work, excavation is done, basement walls, footing, slab on grade, depending on where you are, is in. And now you're ready to, start framing. So that's about the time that the draw is going to be taken. And what we do is, we're going to get bills from the concrete company. We're going to get bills from the steel company for the steel I-beam, from the excavator. And now we've got bills that total, let's say, $45,000. So we're going to put together a draw sheet that basically says, okay, we need to pay the excavator this much, concrete wall company this much, steel company this much, so we need this much money. We submit that to the title company, and then the title company comes out and they check to make sure that all of that work has been completed, and then they release the funds. And now you can do this two ways. So the best way is for the contractor, once the title company is going to release funds, and maybe you have to pay a little extra for this, but the contractor can go right into the title company. They can sign a lien waiver. So that means they can't come back and put a lien on your home after work is done. Maybe you got a shady company that you're using, and even though you did pay them, they're going to come back and try to collect money and say that you should have paid them more, and they can slap a lien on your house. Well, if they sign a lien waiver, they can't do that. So you're completely protected, and that way you're not even handling the money. So that's what we do. That's how it works, and we do that approximately 4, maybe 5 times throughout the process. Anytime a certain amount of work has been done, we're going to request for that amount to pay those contractors. Now, there are some contractors and there are some things that we end up paying for before the draw comes, and if we do that, like our framer, for example, and this isn't something that we were able to do or that we did in the beginning. But now that we've got money built up in the business account, we can afford to do this. But previously, before we did that, the framer would frame the home, all the rough mechanicals would go in, so on and so forth. We'd be about a month after the framing was done, and then we would take that second draw and pay the framer. Well, We want, with the amount of homes that we do, we want to make sure that our framer is framing exclusively for us and going from house to house. And the way that we were able to make that happen is by agreeing to pay him as soon as he's done, because he's got a crew of 6 to 8 guys. So when he's done and they're done framing a house, he needs to pay these guys. So it's hard if he has to wait a whole month. Then he is basically paying them out of his pocket and then has to be reimbursed. And I mean, that's normally how it goes, but because we're able to do this, we decided to do this because there was benefits for both sides. And that's the key to life, relationships, mutual beneficial relationships. So we pay him, and then we get reimbursed when we take that second draw. So just be aware, there may be some things that you want to have some extra reserve funds for, if possible. If not, you make it work without, but so that you can, if you need to, pay for some things out of pocket at that time and then reimburse yourself when the time comes with the draw. And so that's how it works, at least with the way that we do it. I would say that is more of a traditional construction loan. And you are going to pay a little bit of a higher interest rate with doing that type of construction loan, as opposed to you going in and hiring a builder and getting a construction loan. You're going to pay a commercial interest rate, which is probably around like 5% right now compared to 2% that the consumer is paying. And that's just the cost of, you as a business doing a spec home. But that's not the only way that this can be done. So some of my clients that I've talked with, they have said that, they'll use the land as collateral. If they own the lot, the bank will use that as collateral. And then the bank will require that they put down 20%. But if the bank appraises, say they're going to, again, borrow $450, that's what the build cost is, but the appraisal comes in at $500,000, that counts towards the amount that they need to put down. So essentially, with some banks in some states, you don't really have to put anything down out of pocket. So it's a huge difference between, if we're building a $450,000 house and we have to put down 25%, that's a big chunk to get things going. And we bought the lot before that. I mean, that's a lot of initial money out of pocket. So I like the other scenario, but it sounds like there are catches with that. So if you're, I guess the less that you're putting down, the bank they're always wanting to protect themselves and have low risk. So in the scenario that Nick and I talked about yesterday, there was, the lot was taken into account with collateral, and that counted towards the percentage to get put down. But then when it came time for that first draw, they didn't just take the bills and take, my information that I gave them and said, okay, we'll release that amount of funds. They said, well, no, only 10% of the house is done. So if you are at a point where you've dug your hole, you've got basement walls in, it's backfill, but that's it. There's still a lot of house to go. And they're saying the house is only 10% done, so we're only going to give you 10% of the funds. And then that's not enough to cover what you need to pay everybody. Well, now you're in a scenario where you're paying out of pocket anyways, maybe possibly paying out of pocket to those contractors, or talking with them and letting them know, hey, look, the bank didn't release all of the funds that I needed them to, so I'm going to take the second draw in a couple weeks, in a few weeks, and then I can get you paid then. And you do whatever you do to make this work. But then just know, take, if you can, as much of your profit that you can and put that away to use towards the next home, whether it's putting down that initial money or just keeping it in your business account so that you can pay for these things and they don't come up to kind of, cause issues. But it's something that when you're speaking with the bank, obviously, now talking with a lot of different clients that I have, and then the way that our bank does things, there's a lot of different scenarios that banks operate by when it comes to the spec home lending. So make sure, I think it'd be good to talk to a couple different banks, and you may end up only finding one bank that will do it, and then you kind of just have to do what they want. I mean, really, with us, that was kind of the scenario. I mean, we We found the one bank initially, but then when they said they didn't want to do it anymore, we were still at that point. I mean, we weren't really building any customer homes, maybe a couple. So we didn't have a history. So this bank kind of took a chance on this, but they said, okay, if we're going to do this, you got to stick out a bunch of money. You need the lot and you got to put down 25%. So the bank is pretty safe there. But there's just a lot of different scenarios and options that banks have. So just make sure to get all of the information, understand all of the implications that can arise there. So it is one of the hardest parts, because depending on where you are, like where we are, I don't really know what other bank I would go and talk to about getting a construction loan. And if I'm starting up and I have to put down 25% and I have to buy the lot, that's a lot of money up front. And so for me here, I may have to wait a little bit longer to do this and save up more money than somebody who is in, Alabama. I think I have a client in Alabama where it seemed very easy for them to go in and basically get this construction loan and really not have to put much down, and it just seemed like a dream. I was like, wow, that happens. So just know that this can definitely be a challenge, and if it seems very challenging and you're getting a lot of no's, then most likely you're just going to need to save up more money to be able to do this. But there are lots of other things you can do in the meantime. So say you go into a bank and you determine that, okay, financially, I'm not going to be able to do this for 2 years or for 5 years. You could still go out and buy the lot. If you find a good lot in a good location, land is a good investment. So you can buy the lot. Step number one. And in the course, and even videos that I've done in the past, I mean, I've got different videos on finding a lot, what to look for, but super specific in the course. There's even a checklist for it. But you can buy the lot. You can check off everything on that checklist as far as what to look for and investigating it. You can find a home plan. You can get that turned into a full set of blueprints. You can get an exact build cost for it. So then by the time that you're ready to go, you know what the build cost is going to be. You know what your potential profit's going to be. You've got certain things picked out for the home. I mean, you're way ahead of the game there. So don't just, get discouraged and say, okay, I'm not going to do anything now for 2 years because I can't start this. There's plenty to do in the meantime. So that's all I got for this video. If you don't subscribe, please think about doing that and click the little bell for notifications so that you get alerted for videos like this. Have a great rest of the day. Thanks for your time, and God bless.